After years on the watch list, South Korea's government bonds will soon be included in the World Government Bond Index. To delve into what this milestone means for the nation's economy, our finance correspondent Moon Hye-ryeon joins us here in the studio. Hye-ryeon, first of all, what exactly is the World Government Bond Index?
Well, Jung-min, it's a prestigious global index that tracks the performance of high-quality government bonds from developed and emerging countries. If a country's government bonds are included, it can have major economic implications. FTSE Russell announced last week that South Korea would be officially entering the ranks of its benchmark index starting November next year, after being placed on its watch list since 2022. To be included, strict criteria related to market quality, liquidity, and accessibility must be met, and there was speculation that Seoul would only be given the green light next year. The inclusion was therefore reported to be something of a surprise, but a number of reforms to increase accessibility to foreign investors tick the boxes needed for the FTSE to make its decision. South Korea already met the requirements for market size, but it extended its foreign exchange trading hours and simplified procedures for foreign investors earlier this year.
So, Hye-ryeon, being listed on the index could have major economic implications. What are they?
So the government and analysts are anticipating a number of different economic benefits, but there are three that are being seen as particularly important. Following the announcement, President Yoon Suk-yeol spoke of the first, inflow of foreign capital.
이번 세계국채지수 편입으로 약 75조 원의 글로벌 투자 자금이 유입될 것으로 전망됩니다.
75 trillion won, around $55 billion isn't just a random number. It's been calculated by taking South Korea's 2.2% portion of the index that is linked with roughly $2.5 trillion of total capital. As the index is closely watched by major institutional investors, once a country's bonds are included, these funds are likely to buy them to ensure their portfolios match the index. And this influx of global investment is also expected to affect interest rates.
Interest rates are expected to stabilize, reducing funding costs for people and businesses.
Higher demand for bonds lowers yields as investors accept lower returns for stability. According to the Korea Institute of Finance, the inclusion in the WGBI is expected to lower government bond interest rates by about 0.2 to 0.6 percentage points through the influx of government bond funds. This has a trickle-down effect for corporate bonds too. As government bond yields fall, corporate bonds become more attractive, which in turn reduces funding costs for companies. Analysts also predict that greater stability in the foreign exchange market would come about.
Korean currency markets, the won exchange rate tend to be volatile in part because the Korean won-dollar market is so small.
This means that any large transactions can make the market volatile, so a larger market with more debt could stabilize the won's exchange rates. For example, research from the Korea Capital Market Institute has shown that countries included in the WGBI experience a definite currency appreciation against the dollar.
Going forward, are there any other steps that South Korea needs to take before it officially joins the index?
So, Jung-min, there were expectations that the FTSE Russell would continue to keep South Korea on its watch list for the year due to the government's short-selling ban. So short-selling or shorting is when investors trade with borrowed shares, and they do this in the hope that prices will fall later, so they can buy them back at a lower price and pocket the difference. The government placed a market-wide ban on short-selling last November as it prepared to develop a system to control illicit trading practices after the financial watchdog imposed record-high fines on two international investment banks. Initially, the ban was due to be lifted in June, but it was extended until March next year to test and establish an electronic system to prevent naked short selling. President Yoon pledged to further elevate South Korea's capital markets through the Corporate Value-Up program, which aims to eliminate the so-called Korea discount and undervaluing of South Korean stocks.
Right, it's an important issue. Thank you, Hye-ryeon, for the report today.
Thank you for having me.